It's now my great pleasure to introduce our Luncheon keynote speaker, Jason Donville, President and CEO of Donville Kent Asset Management. For those of you that are home investors or just interested in the world of investment, I cannot recommend highly enough going to Jason's website, Donville Kent Asset Management, if you Google it. And on there, he puts out a newsletter called the ROE Reporter. I highly recommend this. Is a fantastic read for those of you that are interested in investing. You're probably asking yourselves, why am I having a fund manager speak at a life sciences policy forum as a keynote? Well, I get paid to advocate for this industry. I'm fortunate enough in that even if I wasn't paid to do so, I actually believe in this sector. I'm educated in this sector. I've worked in this sector. I have a lot of friends and family that have their careers built on this sector, and it's something that I genuinely believe in. But I do get paid to advocate on behalf of this sector, and all of the people that you've seen on stage, and most of you here in this room, you have your own self-interest in this sector too, in terms of your products and your technologies that you want to move forward and you want to sell and be successful. Jason manages a group of investors and their assets, and his job as a growth investor is to find the greatest opportunity. And he has the ability to invest in any area. I saw Jason on a BNN program called Money Talk several months ago, and it's a great little snippet. And Jason was amazing. Usually when he's on BNN, he's talking about specific stock picks. But in this particular instance, on this particular program, he said, you know, if I had 5 minutes with the Prime Minister of Canada, I would say we need to start focusing on, and I'm paraphrasing here, please forgive me, Jason, Canada's brain power as our national resource and how we can convert that into economic value. And it really represents the growth opportunity within Canada. And so that's why I decided to invite Jason here to talk about this from the investment perspective and the opportunity that our industry represents in this wonderful nation of ours. Please join me in welcoming Jason Donville.
Well, thank you, Jason, for that wonderful introduction. I hope I can live up to it. We'll just go to the next slide here. Let's get all that disclaimer stuff out there. So stop there. I have my associate, Jesse, here managing the slides. Let's go back one there, Jesse. So I tried to come up with a cheesy title, Confessions of a Knowledge-Based Industry Addict. In the next few slides, I'm going to go through a bit of stuff about my background and the performance of the fund. And just so you know, my fund is closed, so I'm not here advertising for you to invest with me because I have enough money in my fund. What I'm trying to show you is that I'm really good at finding people who are running companies that are a lot like the people in this room, and when I invest in them, it tends to do very, very well. So at any given time, about 70% to 75% of my portfolio is in companies that I would say are knowledge-based industries in a very obvious way, whether they're in healthcare or technology. And even if they're not in healthcare or in technology, even in the oil and gas industry, I own a seismic data company that's pretty cutting edge as far as that goes. So even outside of the industries that you would think very narrowly are knowledge-based industries, I'm very much invested in that, and I'm a big believer, and that's really why I'm here to talk about it. Let's go to the next slide here. I'm just going to give a little bit of background a little bit about my background, because we're going to talk a little bit at times during the presentation about education and the relation between education and wealth, whether we're talking about at an individual level or at a national level. And in my case, when you think about those stereotypes of those people that live in Scarborough, right? That's my parents. So it's the early 1960s. My parents, both who have grade 10 education, neither of my parents have graduated from high school. But they had dreams for their children and for their future. And one of the things that they figured out was that generationally, if there was going to be change, it was going to be through education. And so they had 5 children. They've all gone to university. They've all had great outcomes economically and otherwise. So in a sense, on some level, my parents got me thinking about the implication for what knowledge can do to transform somebody in 1 or 2 generations. And I would say that, in a sense, my parents represented that third world country in the 1960s that had great aspirations, and their children lived up to those aspirations. And then in the case, just to kind of make it full circle, I have 3 children, 1 at McGill and 2 at Cornell. So that connection through my parents, when I look at my children who, when they graduated from an Ivy League university, and my parents with their great education, I go, wow, that's amazing. That's the power of knowledge, right? Between 1963, when I was born, and today, and my parents are still alive. They will see my oldest son graduate from Cornell this spring. That's what knowledge can do to transform a life, and what it can do for a life or a family, it can do for a country. That's quickly my background. That's how I'm doing as a fund manager. So the blue bar represents how much I beat the market each year investing in companies run by people like you. So this year, I'm beating the market by about 9%. In a typical year, I'd beat the market by about 19%, and I do it by owning companies like OpenText or Constellation Software or Concordia Healthcare or, yes, Valiant Pharma, which one day was, a long time ago, was BioVail. And before that, it was some little company in a lab somewhere, I don't know, in Montreal or Toronto. It all starts somewhere. But yes, I own those kinds of companies. Okay, so that's how we're doing. And so there you can see, so I started my fund 8 years ago. If you just invested in the broad-based economy of Canada, your dollar would be worth $1.42. If you invested with someone like myself, and once again, I'm closed, but if you did, and you're investing in knowledge-based industries, you'd be at about $4.80 on a dollar investment. So the strategy isn't just a motherhood apple pie. It would be great if we could all invest in this is how you make some serious dough. Okay, if you're really good at finding the kinds of people that are sitting in this room who've got great ideas and great businesses, right? And I'm a little bit later on in the commercialization process, to be fair. I'm not doing startups. I'm doing companies that are already hitting their stride. But you can see it's not just these aren't just words. You know, when you're talking to people about investing in your industry or your company or whatever, you got to sell them a little bit on the sizzle. You got to go, you know, if we get this right, there's a home run on the end of it. Next slide. So what's my secret? I invest in companies that have high returns on equity capital. Companies with high returns on equity capital tend to have high barriers to entry. Okay, and the bulk of the companies I invest in are in knowledge-based industries. So when you read about competitive advantage, whether it's on a company level or on a country level, 50 years ago, competitive advantage was heavily influenced by government, the ability for government to protect you or for geography to protect you. Because 50 years ago, or 60 years ago, somebody in China wasn't going to put somebody out of business in Toronto in virtually any industry. Now, probably 3/4 of the industries that you can think of, somebody, I'm not trying to pick on China, in a low-cost country, Bangladesh, Rwanda, whatever, you name your low-cost country, in about 75% of the industries that we can think of, they can now put you out of business. The other issue is that the government's ability to protect you is becoming diminished because we all understand how trade works now increasingly, that if we protect something, somebody else is going to protect something else that we're trying to sell on. Okay, so let's go to the next slide here. So where does your competitive advantage ultimately come from these days? It usually comes from a patent or a technology or a skill set or an ability to manage scale that is ultimately coming from an intellectual source as opposed to a government protection or a location. And this is my quick and dirty. There's a million definitions out there. You guys kind of know what I'm talking about here. That obviously a biotech company or a cloud company is a very clear knowledge-based industry, but it can often extend into other areas that are not as obvious, like, for example, seismic data, or if you guys know Computer Modeling Group. Those are 2 oil and gas companies that use real high-end technology, or Solium Capital, which is in financial services. You get fintech companies as well, where it really is a technological advantage, but you're getting the idea of what I'm talking about. Next slide. So here's an interesting statistic. When I hear a lot of people talking here, there's a lot of people here that, for lack of a better word, I'll call them bureaucrats or functionaries or apparatchiks or whatever. But there was a lot of people on the stage that are more on the kind of the government level. And I don't work in government. I work, you know, basically in the pure stock market area. But there are 3,985 companies on the TSX in the venture. and 157 of them, by my count, as I define it, are clearly in knowledge-based industries. So they represent 3.9% of the stock market, right? So it's only 3.9 of the entire Toronto Stock Exchange are in clearly, what I say is clearly in knowledge-based industries. Next slide. But they represent more than half of the 40 fastest growing companies in Canada. So if you don't have all day long to look at 4,000 companies to pan for gold, the quick and dirty is take the 150 or 160 companies in knowledge-based industry, because that's where most of the gold is. I can tell you right now, that's where most of the gold is. And it was that way last year, and it was the year before, and it'll be that way next year and next year. And you can send me anywhere in the world, and I'll tell you the same thing, because this is the age that we live in. It's the knowledge-based industries are the only ones where you can build any kind of sustainable competitive advantage. The rest of that stuff is really artificial. Okay, next slide. So examples of what we're talking about. So the long-term return on equity, you see the far columns, it's the 216 projected return on equity. So the long-term return on equity for the Toronto Stock Exchange is around 9%, right? So anybody who's growing at 13.5% is growing at 1.5 times the market. I'm only really interested in companies that are growing at 20%. So I'm looking for companies that are growing quite fast. So on any given day, I can just run through the database without really caring about it and say, okay, so how fast are these companies growing, right? And one of the things you get more in healthcare than in tech is once you get going in healthcare, you don't stay in Canada very long. You become, even if your headquarters are in Toronto or Montreal, you're selling to the States, or you're selling to the UK or to South Africa or whatever. A lot of you guys remember Paladin Labs was a big winner over the last decade. Starts out in Montreal, but before you know it, they're selling into South Africa. They're buying companies in South Africa. They're doing joint ventures in Mexico. Don't let that worry you too much, as long as the headquarters stays in Canada. That's the important thing, is that the headquarters has to stay in Canada. Okay, so you got Valiant up there. You can see a huge company in terms of its valuation, and then you've got little wee companies on there. These are the companies that I'm going through continuously. And once again, there's only a few of them that are what I'd call pure Canadian companies, because in a lot of cases it's dominated by pharma, and pharma very quickly, it doesn't become a Canadian story, it becomes a broader story, but that's not necessarily a problem. The key thing is to make sure that we keep the headquarters in Canada, because that's where the intellectual capital stays, wherever the headquarters is. Let's go to the next one here. So I don't just do life sciences, I also do technology in the sense of computer science, big data, the cloud, et cetera. And there, once again, there you can see some of the fastest growing companies in Canada. And Constellation Software, for those of you who have been watching me over the years, that's been my biggest position since the day I started, and it really is. Now I'm guessing 30% of their revenues are in Canada. The rest of them would be just broadly international. But it started out as this little wee company run by a guy who was really into software, and he had an MBA from the University of Western Ontario, and that's how it got started. And then he got I think it was Ontario Teachers and somebody else to put some money into it, and now it's a massive company. But the headquarters is still in downtown Toronto. So they got operations all over the place, but all that intellectual capital is still sitting there in downtown Toronto. And yeah, 4 or 5 times a year, somebody leaves the company to go across the street and start a new company. And when that starts to happen, then you really have something, right? But this is what I'm looking at every day. This company, Two Cows, literally stands for 2 cows. If you go into their headquarters, which is down by Lampard Stadium down there on King Street, you'll walk in the door, and there's the foosball table and the couch that's all done like in a cow fur or whatever, and you go, oh my God, it's 1999. Like, these guys are still in the .com look, the brick and beam and all that kind of stuff. They started out as doing independent, they're like the ISPs back when you didn't get your cable from, or you didn't get your internet connection from Rogers or Telus, but you got it from some guy down the street who was kind of hooked. They just started accumulating and buying these things up, and they've just been rolling along and rolling along. But you know what? They're rolling along at 35% a year. It's a marvelous company. It's very, very tech savvy. And we own, I think we own 3.5% of the company. But these are the kinds of companies that I'm looking at all the time. Kinaxis is in Ottawa, Enghouse is in Markham. I've got a big position in OpenText, which is just off the list here, but is growing by 20% a year. There's some great technology companies. TO Networks here is based in Vancouver, and they do payment processing for the utilities industry throughout North America. Great technological companies growing at a tremendous rate. Next slide. So why do I invest in knowledge-based industries? To sum up, the great ones typically sell things that are new. That's the economy that we live in. If you guys know a little bit about the demographics of Japan, which I'm sure most of you do, they haven't been growing for 20 years. They're not going anywhere. And the rest of the Western world has demographically fallen into the same stage that Japan is at. So whether it's 2013, 14, or 15, most Western countries are now into this kind of flat, plateauing demographic world. So growth going forward is largely going to come not from Leon's Furniture selling 15% more Chesterfields next year. It's going to be from selling new things, right? It's not going to be from selling more of the things that we already have. It's from the things that we create from scratch. That's what knowledge-based industries are all about. They're continuously creating new stuff. It's about continuous innovation, right? Continuous innovation protected by the sophistication of their intellectual property and their knowledge. It's patents, it's brands, it's complexity. Sometimes it's only complexity. Sometimes that's all it is wow, this is just a really tough business to replicate, right? But whatever it is, it's fairly easy to recognize because when you look at the returns on capital, you kind of go, wow, if a company's got that kind of return on equity, I can reverse engineer it and go, wow, this is why they're so good. And the great thing from whether it's a policy point of view or from an investor's point of view is they reinvest. They just continuously reinvest back in the business. You get the magic of compounding. Next slide. So this is little Constellation software, right? So if you get it right, so we started buying this stock when we started the fund at around $20, and it's around $600 today. So that's what, if you want to not lose track of the sizzle, this is what the sizzle looks like. What's that, a 30 bagger over 7 or 8 years or something like that? And I still own the stock today. It's still my largest position. I have to keep selling it every week because every time it goes up some more, it gets too big in the portfolio. But that's a great company. And those senior executives, they're still based in downtown Toronto. Still a bunch of guys that came out of the Kitchener-Waterloo, London, Ontario area. All the senior executives are still based in Toronto. They're for the most part, Canadians or people who've lived here all their lives. So this is not a story where they had to go somewhere else to become what they are. They've stayed here, and it's been a great investment. Next slide. Okay, so implications for policy, because I know that there's a lot of people here that are interested from a policy. Just some obvious things that when you're talking to politicians, whatever it is, our ability to create or protect high-paying jobs through trade barriers, unionization, et cetera, is weakening. We really only can compete with our brains, but we're really, really good. Think about even there's some people this morning are talking about the biomedical area and the lack of capital, et cetera, because it's always frustrating when you're trying to get something funded and you think. But if we use the rule of 10 when we look at Canada versus United States, if we have 85 healthcare, life science type buildings or companies on the Toronto Stock Exchange, you multiply that by 10, that would be the equivalent of there being roughly 850 in the States. 85 multiplied by 10 because they're 10 times bigger than us. So if that's the case, then we're not in bad shape. We might be able to say we can be better. Maybe that number should be 110 or 120 or 150. But if it's the equivalent of having 850 public companies in the life sciences in the States, we're doing okay. And I think my sense is we actually are doing okay. That we're closer to getting to where we want to be than we think. But the other thing is, if you look at the I'm a big believer in kind of objectively measuring stuff. So a lot of you've probably seen I think it's the QSI rankings on universities in the world that is, I think it's done by the Chinese or whatever. And they originally set this up to evaluate, well, when our students go off for grad school, how do we know the difference between Eastern Tennessee University and University of Western Ontario? Because they both have these geographically hyphenated names, Western Ontario, Eastern Tennessee. So they tried to come up with some objective measures. And I think we've got three universities in Canada that are in the top 100 and a good smattering in the top 300 there. But we're not a big country, so to have 3 universities on that list, which I think is McGill, U of T, I can't remember, maybe UBC, we're doing pretty well there. Once again, objective measures. Now we might want to have a 4th or a 5th school in there, but to have 3 schools, there's a lot of countries that have no universities in the top 100. To have 3 there, I think it gives us an indication that we're doing a pretty good job. But also we are smart. We're a smart nation, and the intellectual property that's being generated just in this city alone in the life sciences is another statistic. So we can only compete with our brains, and we actually have brains. We don't actually have to go out and create that part. And then the last thing is, income inequality is obviously a huge issue. And the relationship between education and how much money you make, let's call a spade, it's so well documented. Just Google those words and you'll get all kinds of charts, right? So if we want to address those kinds of social issues going forward, we've got to make sure that people from Scarborough, the children of my parents, have access to a great education. And then once we graduate, we've got a place to actually employ our knowledge and our skills. And so that linkage between the knowledge-based industries and income inequality is one that I think that has to be put out there. Next slide here. I also look at, and this came up, I think, Jason, you made reference to my comments on BNN, and I would go up further with the last election. It was like, oh my God, somebody should have made this the central policy. Like Justin Trudeau, he won anyway, but if he came out and said, I'm going to go after these big issues here, right? And I'm going to do that by getting youth on board, and I just think this is a slam dunk. If I was running for prime minister, the environment, I know Mars is also great as far as clean tech goes as well, right? That it's a center of clean tech. So you could deal with environment by going after the big idea, which is clean tech, right? You could go after the aging demographic issues, the disease issues, et cetera, with life sciences. Transportation, the transportation problems that we have in all of our cities with gridlock and clean technology or other technologies. There's so many places where a knowledge-based industry can be married to our social problems for a big win-win-win-win. And I don't know why somebody didn't jump on this in the last election. I just think it was a golf ball sitting on a tee just waiting to be knocked down the fairway. Okay, next slide. So, final thought, this is, as I say, I have a son. My oldest son is in his last year at Cornell, and he's doing pre-med, and he wants to be a doctor. This past summer, he had a chance to work in a laboratory in this neighborhood, and the first day he went to school, he got off on Union Station and kind of walked up University Avenue, and he called me at the end of his first day, and he said, Dad, I want to be part of this. This is such an awesome neighborhood to walk through. That's what we want, that spirit that he has. We want that as a nation. We want people who get up in the morning and go to environmental engineering companies where they make a good salary, but they're cleaning up a toxic waste site, and they're using their brains. They have to think really, really hard at how to clean up that site. We want people doing those kinds of things, whether it's in environmental technologies, whether it's in big data, whether it's in healthcare, genomics, whatever. That's what we want. The dream that I have for my son, we want to have that kind of a dream for the nation. So I'll leave you with that, and if anybody has any questions, I'm more than happy to stick around.
Thank you so much, Jason. People are going to think that I paid you to say all that great stuff about our sector, but given your performance on the exchange, they'll know I can't afford you. I want to pick up about where you started in terms of the impact of knowledge on your family. So I was the first person in my family to go to university, and of course my parents were all very, very proud. Then after 4 years of university at Waterloo, I told them I was going to grad school, and they went, "What do you mean, you're not going to get a job?" So it was one of those, but they're very proud now. But they were scratching their head about that more school issue. Is there questions for Jason? Right here.
Hi, you've invested in a lot of companies in knowledge-based sectors of the economy that have succeeded in growing, and they're global players.
Yeah.
A lot of the discussion today was for a growth strategy.
Yep.
Could you generalize or pick a few things that these companies are doing right as entrepreneurs that could inform this audience?
Yeah. I mean, there's a lot of people who put a lot of time and thought into these strategies going forward. So I'll just maybe share a couple of random thoughts in terms of what I heard today. I used to live in Singapore. So when I graduated from Western, my first job was to go to Singapore. And Singapore, Israel, the province of Quebec, these are two countries and a province that have kind of, as a strategy, gone after industries, right? And to do that, in some cases, you have to be a country that perhaps is not as democratic as we are, where we have to spread things around. That's just the nature of what we are. Or you have to perceive yourself being in a threat, where you go, like Singapore, we don't have any natural resources. All we have is our human capital, so we've got to develop it. when you read the history of Singapore, it kind of looks straightforward, but you have to put yourself in the position of the politicians who are trying to sprinkle things all the way around. And because the province of Ontario is such a diverse economy, I don't know if you will get like the wish list that people had this morning. I just don't know if you'll get that. And I think, well, maybe there's an alternative strategy. And I think perhaps when I look at interesting companies in the technology companies in the history of Canada, an alternative way is to try to get your 3 or 4 companies that are getting over the line, to get them big. And I'll tell you an example, like if you look at Research in Motion, or now called BlackBerry, if you look at Nortel, if you go back in Alberta, you look at Novotel, a lot of these companies, they're technology companies, they go up, they have this big 15-year run or whatever, and then they eventually, something happens and they die. But over that course of 10 or 15 years, there's people continuously leaving those companies and starting new startups. And so you kind of look at BlackBerry right now and go, geez, that was kind of a bust. And are you kidding me? Because they sprinkled seeds all over the whole KW area, and they brought in all this huge knowledge. And then you get that next wave. I've seen that Confederation Life was another is a financial services company where Prem Watsa is the most high-profile finance company. There's so many guys that came out of Confederation Life that are now running finance companies. So, if there was a way as an alternative strategy to look at the 2 or 3 most promising companies and figure out a way to get them big, right? But like the province of Quebec, get a commitment that they won't move their headquarters out of Toronto. Keep the brain here, because they'll have manufacturing operations in New Jersey or Ireland or wherever, but keep the brain here, because what'll end up happening is you'll get a concentration of 50 or 60 executives where knowledge will be built up in that headquarter, and people will leave and start new companies, and then from there your cluster will take off. I look at, for example, I know a bit about what's going on with Mars. I've known a few people here. The micro end of Mars, I think, it's fantastic. What's happening on the universities here and at the micro level. But what you don't have is those guys that are quitting the medium-sized pharma companies and grabbing one of these companies, saying, these guys have no clue how much potential they are, and we know how to get it from A to B quickly and cost-effectively. And I don't know if you can do that other than you got to get a couple of the Research in Motion, BlackBerry-type companies in the life sciences to get up to that size where they got large executive suites, and there's just guys leaving, or men or women, executives leaving continuously with that knowledge. And I think if I was in charge, that would be one of the things that I would be doing. Is I'd be sitting there at the province going, what are our 3 or 4 small to medium-sized guys that are successful? And I would sit down and say, what do we need to do to make you guys get large quickly? And we will help you, even if it's financially, but we want to guarantee right now you won't move your headquarters out of Toronto. That's what we want, that guarantee, and we'll do everything we can to get you from 50 million or 25 million in revenues to $500 million or $1 billion. But we want an ironclad commitment. We will give you just about anything you want. We will give you tax breaks. We'll invest in you, but you got to keep your headquarters in Toronto. That's just kind of my thoughts.
Well, the good news is Mars and the province of Ontario recently landed a new investment in Johnson & Johnson Innovation with J-Labs, the first J-Labs outside of the U.S., and J&J is bringing their global commercialization expertise and infrastructure. So we're importing some of that in the absence of having that made in Ontario success story. But I think, when I started thinking about this idea of a strategy, and we talked earlier about a common vision, it's exactly what I was envisioning, is how do we get to that Ontario success story, that BlackBerry in the life sciences. And as you said, it hits a tipping point where you start to see that spin out and it becomes self-perpetuating. Is there another question at the back here? David.
Hey, Jason. David Main, CEO of Equinox Pharmaceuticals from Vancouver, and I can't believe we've never crossed paths. My question for you is a very interesting talk. Do you only invest in TSX-listed companies, and or if you invest outside of the TSX, have you tracked a similar strategy and how it compares?
So when you start a fund, you have to have some mandate, right? Which, you can't chase the flavor of the day, so you kind of have to fix it. So my investors are Canadian dollar investors who are preparing for retirements in Canadian dollars. So I will invest in any company listed on the Venture or the Toronto Stock Exchange. However, I used to work in Asia, and if you go back and Google my name, you'll see that I've had a pretty successful run as an investor in Southeast Asia as well. So I certainly know methodologically what I'm doing. the strategy in a sense is not that unique of looking for companies with high competitive advantage. This is basically Buffett's strategy. The only difference between myself and Buffett is he's more reluctant to take on science where he goes, oh, I don't know what genomes are, but I understand what a company that sells chocolate bars or candy or fried chicken is all about, right? And I'm more comfortable, and my team and I are more comfortable getting around the science. But I think the stuff that I've been telling you here is just basically Buffettology, but updated for a different generation that can get their heads around the internet or pharmaceuticals or things like that. But I mean, even Buffett owns Johnson & Johnson, right? I've got pharmaceutical companies. Buffett owns IBM. I own CGI, which is the Montreal-based IT services company. So even in those cases, I've got the Canadian versions of what Buffett owns.
Other questions for Jason? If not, please join me in thanking Jason. Terrific talk. Thank you, Jason.